Good morning, welcome to this morning's Outlook. Obviously the focus of today is what the Fed doing. A lot of people will be looking at that. I would imagine today, on the basis of a Fed meeting, it can be, now it doesn't mean to say it will be, it can be quite a quiet day. People tend to hold back a little bit. The big boys are not so keen on throwing a lot of volume in, so be prepared as ever. So what the Fed going to do? Expectations is a 0.5% increase. There was for some time a expectation they might even increase it by 0.75, although most people now have sort of dropped it back to half a percent. But if it was 0.75, that would be a more positive shock to what's now expected as the main, and could get the dollar pushing up even higher. Now there are some concerns. I was reading through some sentiment and some comments and looking at some numbers, and there are some concerns over the housing numbers, which are softening. Wage figures are not as inflationary as expected. The dollar's very strong, and the Treasury yields are also already themselves tightening the financial conditions. So it's almost a self-fulfilling prophecy here in terms of some of the things that were expected, because there's an expectation of rate increases. Lenders are already increasing rates, so that's already having its effect and maybe starting to slow things down before the real hits get in there. However, and there is a risk, there is a discussion, some seeing growth prospects dropping down. The most important thing maybe coming out of this is the forecasts in terms of GDP, unemployment, inflation, of course, and the rates themselves. So we're in June, so January, February, March, April, May, June. Oh, we got a dot plot at this month. I can't remember if we got the dot plot this time, but that certainly the expectations sitting there will be a huge weighting on what we're seeing here. Now I'm looking at the dollar index actually, and we have as of yesterday or today even. I'm just looking. This is today, isn't it? No, it's not. It's 14th of the 6th. It's the 15th today. It's delayed here, but I don't know why it's not sitting there. Anyway, we are short. Sorry, we're short. We've already broken the prior highs there, so that's actually taken out the prior highs. Has it got some more movement? Well, there's certainly possibilities that it could push up again, but it's had quite a strong move. We'll have to wait and see, of course, as ever. But let's look through these other markets. In fact, just before I do that, a quick look at the risk of other risk events today. So we've got the FOMC at 7 p.m. this evening. Leading up before that, just looking at anything really, core retail sales, quite important there at 1:30. So we've got some potential mover there beforehand. Let's just look out for other speakers here. This is quite useful for speakers. We've got okay, so we've got some lower key data coming out. That's out already out. We've got Holzman speaking there at 9 o'clock. So there are a couple of in 10:15. So we've got a couple of European speakers, or ECB speakers, I should say. Core retail sales already mentioned. Canadian households might do something for the Canadian dollar, but it's not that big a mover at the moment, or hasn't been. So the rate it already. Oh, we've got Lagarde speaking there at 5:20 this evening. So there are some speakers out there. FOMC statement. That's really what a press conference would be key at 19:30. Anyway, there we go. They're the key things that are sitting there. Let's look then at the chart. So euro dollar hasn't come as low. The US dollar's obviously pitched lower. The euro dollar has not pitched so low. In fact, the euro at the moment is catching a little bit of a bounce there. And I've just noticed it wasn't quite a double bottom, and it's given us a higher low through. Well, we'll see what happens this morning. And I'm going to be patient at trading today. We've already seen the daily pivot, the R1 being hit. When we've seen both of those being hit, the probability drops down of the R2 being hit if you're running into the upside. And yes, I suppose we could just end up in a bit of a chop here leading through to the FOMC. So we've effectively double topped in the shorter time frame here. Of course, we could just roll back over this morning, but it's just that sort of crack in the foundations there, possibly. And look, even the pound here, okay, it's come out on the pound. The pound had an awful week, really, so far, having sold off Monday, Tuesday strongly both days, bouncing off its monthly S2 where it sits at the moment, and well, it's almost down to its weekly S3. It wasn't a great deal of distance from it. Would I look for a short from it again? Well, yesterday's I didn't actually take it on the pound. I took it on the pound yen, but beautiful pattern there. Is this running down? Well, we could be looking as simple as a breakdown. I do oversimplify this a little bit. There is some method in getting into these trades, but it does look like, well, if it breaks the lows there, it's certainly got some potential to run down. But there you go. There's the pound still looking weak, not showing the cracks that the euro is at the moment. The yen this morning, well. Checking it's got the dates right here because it looks almost like yesterday, but it's not. Yesterday ended up on a quite a positive note for the US dollar against the yen, and this is the reason we're seeing this the dollar stretching further than the euro has in terms of taking out a new high, where the euro is not quite taken out the low. So what we got on the euro, it's rolling. It's in a sort of a channel it's working through at the moment. Could well just find a bit of support off the 34 here and continue back in its route there, but at the moment I do wonder if sort of money running away from the dollar, or we might see a bit of money running away from the dollar there. The news is there. If there's nothing else to report, well, it's all been priced in, and we could see the dollar just sort of giving something back, maybe tomorrow. I will wait until tomorrow, most likely. Aussie dollar. So the Aussie dollar has sold off again as well. Had sold off again, doing the same retracement here. So we're seeing the same retracement at the moment, although it's struggling. It's been one of those that's just sold and sold, and it's been easy pickings in a sense to a degree. And it could be this morning again. I'm just sort of looking at the sort of pattern that's coming through. It's struggling. It's similar to the pound in terms of the movement here. Not only does interest rates, so in US sort of pushing up there, hurt the Aussie dollar, but you've got to remember, in the bigger cycle of things, if commodities are suddenly in less demand because growth starts slowing up, because that's what they're trying to do almost, then in that case you end up with this sort of lack of commodity requirements, and it ends up in a softer Aussie dollar. So we'll just have to wait and see what comes of this. But in the short term, it's still got its flaggy pattern sitting there. Canadian dollar. So the Canadian dollar's giving it back, continued giving it back against the US dollar here. US dollar pushing up, surging up there, slowing up a little bit. Some more overlap on the bars themselves, as opposed to where you're getting these sort of bars that are not overlapping. You get starting to get the overlap a little bit more in there. Some bars that are some a complete retracement bars amongst it. It's starting to build up there, so maybe running out of momentum here. It almost looks like that. Well, it didn't double top, so it's not a divergence, but it's certainly at the moment a bit of a lower high at this stage, although of course that could push on. It has bounced off the daily pivot. It could be pushing on towards the R1 up there, so it's had a good time, but well, it really depends how these markets go this morning. If they do start picking up, well, this could be, as I say, certainly to the upside, got the potential. Right, let's have a look at gold. Gold's a right mess at the moment, he says. Yesterday it really didn't do too much. It sold back a little bit later. It's struggling a bit more at the moment. But you could just look at this chart. Forget anything else. Just look at the price action, and the chart is ugly as anything. It has been putting lower highs in. It pitched it confirmed that earlier in the week here. It's put another lower high in there yesterday, and well, it's rallying back up at the moment, but do wonder if it'll roll back the other way. And roll down again. Sorry, when I say roll back the other way, it's been pushing up, so rolling back downwards. So that's what my vision there of view what's likely to happen there. Of course, gold will take a big movement this evening, and is known for its big movements around that time, and I'd rather not be in it for sure. Oil. Oil's a bit of a funny old one at the moment. It really has had. I mean, yesterday, look at that bar. It put in a new high and then it chopped down. Ended up at a bearish day, so there was a new high. It just sort of hit the sell orders by the looks of it, and then got continually sold right the way through, looking softer. And is it a key reversal bar? It is a key reversal bar. So if we did see a breakdown of the lows of that, well, maybe safer to wait until below the daily 21 there. We could see this coming off further. It could have a bigger correction. It's certainly a warning bar, if nothing else. And again, if we see demand start slowing up, then the demand for oil tends to slow up as well. So it could all go hand in hand. There's plenty of recessionary talk around the world at the moment. Eurozone, the UK, obviously the US, and there's plenty of that sort of speak going on. That would normally see oil sliding off like a good one. Of course, things have changed this time and a little bit different, but either way, it could all be a bit softer. Right, okay, let's go across and look at those cryptos, and we'll start off looking here. We're not going to look at them too much because there's not a lot to say apart from off they've come again, and in fact they've come off this morning. It's made even a new low here, so there is almost a panic that seems to be running through there. I was looking at a gauge that I follow, which takes into account the movement itself, and the comments that are coming around it, and a number of other factors, and it's in this area called extreme fear. So that's how it is at the moment. It's well, I'm not surprised. There's a lot of fear in there. Now there's an old saying that's when everyone's fearful, you should be going out and buying. I wouldn't be going out and buying on this at the moment. Of course, the central bankers have been jumping in here and talking about the intrinsic value of these currencies. They don't have any. So that's not helped. Well, I don't think it's made a lot of difference really. It's just gloating. Anyway, you've got to remember what the first idea of them. Their first idea wasn't to see the value of the currency go up. It was to provide an exchange system that was less costly than Western Bank or whatever it is, where they charge such a huge percentage of commission. So the idea was to make people, or make it cheaper for people to exchange money, and perhaps that's where they're becoming back into, and that's where their place will be. Right, okay, that's Bitcoin anyway. Sorry, putting extra bits in there. Indices, the CSI 300. It's had a half reasonable time there through the Asian session, pushed up there. quite some move from following through from yesterday, pushed through its weekly R2s, looking reasonably solid at this stage. That's probably because of the reopening in places. The Nikkei, it's still looking bearish, and I mean, I was expecting after yesterday we might have seen a bit of a gap fill, but still sold off there. So that remains in that territory. And the Nifty 50, it's a little bit positive where it is at the moment, but it's struggling, as I've already said this week. It's taken out the prior lows there, so it's certainly looking bearish. Now I'm reliably informed that the S&P yesterday was officially called a bear market due to its 22.4% drop, and anyway, it's still looking weak. We could see it was looking soft, but now it's officially a bear market. Or has it got some bigger moves to come down? Just look at the weeklies on it. It's certainly coming off as I look at this. So yeah, very weak market there at the moment. A real retracement. I should do some further analysis on that and look at where it could go and where we could find some support at a later time. Dow Jones is slightly up this morning, and so I wouldn't be surprised if we see some consolidation. If the markets aren't moving too much, we might see even a bit of a rally in the equity markets, and we're seeing the same thing going all the way here to the CAC. It is rallying a little bit this morning, the CAC and DAX, money coming through, but overall still bearish old moves there. FTSE is open now. I can actually talk about that. There you go. FTSE is already up there as well. Sort of double bottom there. So there you go. Be careful today, as I say, with the FOMC. It can affect these markets right the way across. Some traders may not even want to be in the market too much. So trade carefully. Thought for the day then. I missed this the last couple of days. Now, this is a bit of a martial arts one, this one, but it fits well to trading as well, because I think people do this. The saying is, do not speak badly of yourself, for the warrior that is inside you hears your words and is lessened by them. We talk ourselves down as traders. It's very easy to talk ourselves down as traders. How much do you think that talking down as a trader affects what you're actually doing? You're almost sort of, it's that self-fulfilling prophecy. The more you talk yourself down, the worse things sometimes get. So you should be talking yourself up. That's the moral of the story. And be a bit more positive. There we go. Have a great one. And on that note, I'll speak to you tomorrow.